In the middle of the Vietnam War, I was born. I was born in the Midwest. I'm a Midwest boy. If you're reading this on Saturday the 25th, it is my birthday. And so many amazing things are going on in the world today, and especially this week. And sometimes it's always a competition of what I think is of most value and most importance to you and your money and protecting your future and protecting your portfolio. And what I want to talk about today has a lot to do with Japan and the experiment that's going on in Japan. And the thoughts I have, I'm starting to put down my thoughts on one screenshot for you so you can see them. But basically my thoughts are the investment world is accelerating, not decelerating, but accelerating toward a time of extreme financial instability. And every extra yen or dollar or pound or yuan or euro that gets printed in this world, the world gets more unstable and not more stable. And that's something that I really want you to take away from this conversation today, because most people might have this belief that, well, no one listening to me has this belief that more money printing actually leads to more stability. It actually leads to just the opposite. Now, what happens with that instability? We're going to get massive deflation and we're going to get massive inflation. And I'm going to show you today how we're actually getting both of them at the same time. Probably we'll get deflation first in some things and then get deflated, get inflated, and then vice versa. The things that are getting inflated right now will get deflated. But after that inflation, deflation happens, there'll be this great resetting. And the kind of underlying pin or the underlying conversation I want you to hear throughout this market situation report is the last line on the screen, which is, as long as the investor defines their strategy or defines their safety as an asset or a sector, they'll get hurt. So let me just say that again. As long as an investor defines safety as an asset or a sector or a ticker symbol, I think they're going to get hurt in the future, because there is no more hiding and there is no more safety in an asset or safety in a sector. It's actually safety in a strategy, hiding in a strategy, and I'll talk about that. The first screenshot, the first image I want to show you is this image right here on the Japanese 10-year government bond, the yield on the Japanese government bond, the 10-year. And look at this. This is amazing. Basically, in the last month, the Japanese government used to pay less than 0.5% a year for 10 years if you let them borrow your money. That has doubled almost overnight. Now, this is an extreme problem for Japan, considering, let me show you this screen here, considering that already 58% of all the tax revenues that the Japanese government brings in, 58% goes to servicing their debt, both interest payments and paying back that debt service. So total debt service. Interest payments alone, just interest payments alone, is just about 30% of their total tax revenue. Now, if the 10-year yield on the Japanese government bond just doubled, and it doubled because people are getting out of it. So when you see the yield go up, that means the price is going down. The price goes down when people are selling. So people are selling the Japanese bond, and I have to believe the Japanese government is absolutely frightened, because I don't think they have enough money to buy enough Japanese 10-year notes to stop that yield from going above 1%. And the battle line is clearly being drawn at 1%. This is incredibly unstable, because if this gets out of their hands, and it will, meaning if they can't control the interest rates of the 10-year Japanese government bond, that means there's no way they'll ever be able to service their debt. That means the yen, at least from the US dollar to yen, is going to have to go 120, 150 yen to the dollar. And right now it's at about 100. And not too long ago, the US dollar only bought 78 yen. So this is very, very unstable. So this is inflationary. When you have the yield going up overnight, doubling overnight, that's inflationary. And the Japanese stock market is up 80% over the last 6 months. That's inflationary. And yet on the other side, we go back to here, the United States, and look at the screen here. This is the velocity of money in the United States. And notice all of those vertical gray columns. Those are all the recessions that go back to about 1945. What I want you to notice is notice how the red line always collapses or kind of falls off a cliff during these gray periods. So in 2008 it happened, in 2002 it happened. In 91 it fell, not that much, 82, 80, 74, 70, 60. But notice this, velocity money has absolutely collapsed, but there's no recession. Now, part of the reason is because there's so much just manufactured manipulation and intervention that, there are no macroeconomics anymore. There's just the Fed. But this is deflationary. This is what Ben Bernanke is looking at and why he's saying print more, print more, print more. Because money, the velocity of money is falling. So you've got deflation happening in the US with the velocity of money. You got deflation with wages as a percentage of GDP in the US. You've got inflation in the stock market. You've got inflation in the Japanese 10-year bond. You've got inflation in real estate in the US. And these are going to more extremes. Now, while this is all happening, you have deflation in gold. Gold from August of 2011 to today has fallen from about $1,920 to, let's just call it $1,400. Okay, so that's what, $520. So that's kind of deflationary, or that's fallen. But during that time period, look at the screen here. Look what's going on right now. This goes back to about 2006. There's never been more shorts on the COMEX gold futures as there is today. So more hedge funds and, private equity, or it doesn't matter whom, are more short gold today than they ever have been. Now, what's crazy about this is eventually they have to buy back those shorts. They have to liquidate those positions, and you liquidate a short position by buying back what you shorted. Now, this just happened to a company called Tesla Motors. Now, Tesla Motors is nowhere near the size of gold or the COMEX gold exchange. But interesting about Tesla Motors, 50% of the stock, of the float of this company is owned by five guys. And if you look to the very lower left of this price chart, you'll see the beginning of August. And there Tesla Motors was priced at about $25. Well, back in April, about 2 months ago, an announcement came out. J.D. Power said that Tesla was the highest rated car since 2007, and Tesla had its first quarterly profit ever. And you can see what happened to all the people who were short. And just so you know, 50% of the shares were sold short on this company, and 50% of the shares were owned by five guys who weren't going to sell their shares. So basically what you had was a $25 stock going to $100 from August to today. That's a short squeeze, and that's in a teeny tiny company called Tesla Motor. What's going to happen? I think not if it's going to happen, but what's going to happen when the short squeeze happens in gold? Because the paper gold is getting sold and the physical gold is moving over to the strong hands. It's moving over to China. It's moving over to India. It's moving over to family offices. It's moving over to people who aren't going to sell it, just like the five guys who own 50% of Tesla Motor weren't going to sell their shares. That means people had to, these short sellers had to pay a much, much higher price for Tesla Motor company than they probably thought they would. This is what a short squeeze looks like. This is what instability looks like. Whether it's gold or Japanese 10-year bond or the US government or real estate or financials, this is what instability looks like. And the question most people are asking themselves is, where do I hide? Where can I hide my money? Where can I protect my money? And usually they think, well, I have to protect them in companies, private or public, or currencies, the Australian dollar, the US dollar, the Chinese yuan, or debt, maybe sovereign debt or municipal debt, or corporate debt, or physical, lawnmowers or gold or silver or commodities or houses or rare paintings. But you have to put your money somewhere in these four asset classes. There is no fifth asset class. And so the answer is, where do you hide? You hide in strategies. You hide in strategies that can adapt to the instability of the market, the instability of the world. The strategies are going to be what hide your money or protect your money. It's not an asset class, right? It's not a sector, but it's a strategy. And that's the question I want you to think about this weekend is, what is your strategy and how has it done? Not the last 4 years when everything's been going fine. You don't pay your financial advisor when everything's going fine. You pay them so when things start breaking down and falling apart and falling off a cliff, that's when they earn their money. So how did it work for you in 2008 and 2000? Or for some people, real estate 2006. Not an accusation, just I want you to observe, how did it work? Because When that happens again, when we have the next cleaning out, and this isn't gloom or doom, this is coming. We have recessions in this world. We have business cycle recessions. We have balance sheet recessions. They've been pushed off. All that means is they'll be steeper and possibly longer when they happen. So you hide within a strategy that protects your money and adapts to the world. But you cannot escape being in one of these 4 asset classes. I'm so glad you guys were with me this weekend, this Memorial Day weekend. The monthly strategy gathering is coming up on June 11th. I'm going to stream it live at 11 a.m. It'll be rebroadcast at night. And of course, we'll go over the markets, speed investing. I'll take your questions live. We'll update the strategies, have time to go over market x-ray. And there's a couple stocks I'm watching that are pulling back right now that I'm getting pretty excited to add to the obvious trend portfolio, which means I'll be selling 1 or 2 positions, taking a really nice profit, and we'll add a new one. You guys have a great weekend. I'm so thankful that you're in my world, and I'll speak to you soon.